Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody, guys. Let's take a look again at euro currency. So euro is other markets preparing for the Fed session, and in the weekly report when we talked about the technical picture, technical side of the report, we discussed the moments that makes us think that why euro actually looks more bullish rather than bearish. And from the technical point of view, here's the few moments. So first of all, market stands too long around the previous top, and that's not the way how market usually behaves when it intends to show deep retracement or shows reversal or something of that sort. The downward action happens always faster than any upward action. And if market hits the major target, and we know that market stands at the monthly COP, the 618 extension, the big ABCD pattern, and it doesn't drop, it means just that it's preparing for upper continuation and just building an energy for the upper further breakout. But there could be some limitations at the moment when the market hits the target. For example, in our case, that was overbought on the weekly chart, some overextension of the net long position on the euro currency. All this stuff is limiting the upside potential and prevent immediate upward action, but still it doesn't make impact on any fundamental background. And that's the reason why some markets just stand around the top and neither drop lower nor starting the upward action for some time. That's the first moment. Second moment, we talked about the possible bullish dynamic pressure, because the stance market showing flat standing and trend mostly stands bearish, but the price action is not. So you can see that high lows are forming here. This market mostly stands in some kind of upward action. Finally, the major detail for our short-term trading plan is these lows. As we mentioned in the daily, in the weekly report, we treat it as it really could be the fake breakout of the flag pattern, the downward breakout that has failed. And in this case, as you know, as you could take a look at this flag pattern, that even by the classic technical analysis calls as the bearish trap. And usually it suggests if market shows the fake breakout to the downside, it means that it's going up and intends to break it to the upside. This is common view on the current situation. That's why you can't get the second bearish breakout, second fake breakout. It means that if market will break it lower to the downside, it will be final and real breakout in this case. At the same time, these lows are very important for the upward action as well, because while market stands above these lows, it gives chance on upward breakout here, an upward continuation. So this is just logic conclusion leads us to the idea that while market stands above these lows, we could consider taking the long position, because holding of these lows will keep the feature of this action as the fake breakout, while the breaking it down, it will be this time definitely the real downside breakout. So then we drop to the fall time frame chart and said if you will get on Monday some grabbers here, you could easily take the long position. And indeed, if I'll take a look here, so plot MACD predictor, you'll see that this candle and that candle has become the bullish grabbers. You can see even on the MACD that was touch of the two lines. And as reaction here, so market just continue upward action. So if you have taken the long position here, now you could move stops to the break even and see what will happen. For the other traders who have missed this opportunity, it will be, well, overall situation looks not as attractive as it could be, especially yesterday, because currently, guys, it's very difficult to find attractive place an attractive background for taking the position, because, well, taking position right here, it will be very far standing stop compared to the daily stop. Besides, on the daily chart, guys, keep an eye, market is flirting with the MACD line. It means that here we could get opposite grabber. That also, maybe it could fail, maybe it will not impact on overall situation, but that will be the risk factor. And when we have on the daily chart the bearish pattern, hardly you will be very fascinating with taking the short, taking the long position at this moment. You probably will choose the situation where you would like to see some clarity, and when the situation with this grabber will be resolved. Either it will be the breakout to the upside, or it will work, and then you will searching for something else. Also, market is coming here to the nearest ending resistance, which is 1912 area. This is COP, and already tested here 618 level. That will be agreement resistance. For the market, it's crucially important somehow to show the breakout up and raising of this sell-off. That will be a decisive moment on the chart, and once it will happen, market really could show the upward acceleration. So on the intraday charts, on the hourly chart, here we'll also have minor ABCD pattern. Reaction on this was regardless cheaper to sell something of that sort was very small. Market's gradually is coming higher. It hits the OP, now stands in minor reaction. XOP stands in 1933. So slightly above this area. So XOP. So on all these levels, it could be some reaction. Maybe even market could reverse down on the impact of the Fed statement, something of that sort. That's why, in the current circumstances, only those who already have taken the long position here yesterday could continue trading with this. Manage the stop, decide whether you would like to maybe fix some profit on some targets. So here's first one. This will be 1930. Next will be 1970 here with the OP if the market will get there. But for those who would like to take the new long position, guys, I do not see currently good setup, because too much risk stands around. We could get daily bearish grabber, we could get dollar supportive Fed statement, and taking the position without any great support, without any pattern, will be, well, very risky. And in these circumstances, I do not like the idea of taking the new long position. For the short position, well, I also do not see yet any good background. So maybe it makes sense to wait at least for daily bearish grabber, but recall what we said about these lows. So that might be fake breakout. So that's why currently, guys, only those who already have the positions, probably you could keep them and manage them, deciding where to book some profit maybe and how to tight stop, because currently it's a very tricky situation. We are coming to the Fed, and it's better to control your trade that you already have in place. Speaking on the cable, as market shows really fast action currently, guys, I suppose that we should wait for a reaching of this level. Initially we thought that maybe from this minus support will be some reaction, but it hasn't happened. Market just collapsed down on the negative news on the new round of the Brexit negotiations. We talked about this in our weekly report as well. And currently, guys, I think it would be better to wait for reaching of this level and then see what will happen around it, what patterns will be formed there, and then make the decision. So as you can see, now we are mostly in the standby mode and just watching for some more clarity on all markets.